Hello everyone and welcome back to the lesson. Today we are going to study tax audits and their significance. Types of tax audits and their significance. Types of tax audit and their significance. First of all, what is a tax audit? A tax audit, candidates, is a review of an organization's or individual's accounts and financial information to ensure information is reported correctly according to the tax laws, and the objective is to verify the reported amount of tax. The objective is to do what? Is to verify reported amount of tax is correct. So a tax audit is a review of an organization's or individual's accounts. It is a review of the accounts. It is the examination of the accounts to ensure information is reported correctly according to the tax laws. And this audit, a tax audit, is conducted by a tax authority such as the Kenya Revenue Authority. The purpose, candidates, of a tax audit is to ensure tax compliance and to discourage tax evasion. It also serves to educate taxpayers on how to properly comply with tax regulations to prevent future errors. And candidates, the outcomes of a tax audit can result in no change, which means everything was in order, or it may result in a proposal to adjust the tax return, which could lead to the taxpayer owing more tax or receive a refund. So that's the meaning of tax audit. But today we are going to study the types of tax audit and their significance. So by the end of this lesson, candidates, you should be able to explain the types of tax audit. You should also be able to outline the significance of each type of tax audit. So here in Kenya, candidates, I've said that tax audits are conducted by the Kenya Revenue Authority to ensure compliance with tax laws, to ensure compliance with regulations. And these audits play a crucial role in maintaining the integrity of the tax system and promoting fair and equitable taxation practices. And in this lesson, we are going to discuss 4 types of tax audit. 4 types of tax audit. The first one is known as desktop audits. Desktop audits. Desktop tax audit. Desktop audits. These are the main common type of tax audits in Kenya. They account for a significant portion of all audits conducted by the Kenya Revenue Authority. And these audits are typically conducted remotely by reviewing taxpayers' tax returns, by reviewing taxpayers' financial records against available data sources. Desktop. Remotely. Do you understand? Desktop. So candidates, another important point to note about desktop audit is that these audits are often initiated by the KRA when KRA identifies discrepancies or inconsistencies in a taxpayer's tax return. And the authority may request additional documentation or clarification from the taxpayer to resolve such discrepancies. So the key thing to note here is that these audits are conducted remotely. So what's the significance of desktop audits? Significance. What's the significance of desktop audits? What's the significance of these audits that are conducted remotely? Now, desktop audits serve as an initial screening mechanism. They serve as an initial screening mechanism. The audits serve as an initial screening mechanism to identify potential tax compliance issues. Such audits help KRA prioritize cases for further investigations. Desktop audits help KRA prioritize cases for further investigations. Do you understand? Because they are just done remotely, and they serve as an initial screening mechanism to help KRA prioritize cases for further investigations and ensure that resources are allocated effectively. So that's one type of audit. This is the significance. The second type is office audits. Office audits. Office audits involve a more detailed review of taxpayers' records. Office audits involve a more detailed review of the taxpayers' records and financial information. And these records are conducted at KRA offices, where KRA officers meet with the taxpayer or the representatives of the taxpayer to discuss tax affairs. And these audits are typically initiated by KRA. Do you understand? After screening different taxpayers, and it has come to the notice of the KRA that there could be a taxpayer who has not complied, then a taxpayer may be summoned to the KRA offices, where there is a detailed examination of the taxpayer's records. You understand? It's a more detailed review of the taxpayer's records. So what's the significance? Significance? What's the significance of office audit that we've said is conducted at KRA offices? What do you think would be the significance? Now, office audits allow for a more comprehensive examination of a taxpayer's tax financial situation. It does what? It allows for more comprehensive examination. Allows for comprehensive examination. It's more comprehensive compared to the desktop audit. The significance of carrying out an office audit is to allow for a more comprehensive examination, a more comprehensive examination of the taxpayers' financial information. And such audits provide KRA with a clear understanding of the taxpayer's financial situation. The taxpayer, the Revenue Authority also gets a clear understanding of the taxpayer's tax practices, which enables them to identify potential non-compliance issues because of the nature of the office audit. It's more comprehensive. If it is more comprehensive, then obviously KRA will have a clear understanding of the tax practices of the taxpayer. That's the significance of an office audit. The third type of tax audit is field audits. Field audits. Here we say that the audit is conducted in the offices of KRA. Here the audit is conducted in the field. By field, I'm not referring to an open space. No. Field audits are what we may say the most comprehensive types of tax audit in Kenya, involving a thorough examination of a taxpayer's tax records, financial information, and business operations. This audit is conducted at the taxpayer's premises. It's conducted at the taxpayer's premises. The first audit is conducted remotely. In the second type, office audit, the audit is conducted at KRA offices. The taxpayer is summoned to the KRA offices and an audit conducted. Field audit is the most comprehensive type of tax audit and is conducted at the taxpayer's premises. It is conducted at the taxpayer's premises. It is the most comprehensive type of tax audit in Kenya. This is where KRA officers conduct on-site inspections. They conduct on-site inspections. They carry out inspections on-site. All right? And the officers carry out interviews with relevant personnel. These audits are typically initiated for businesses or individuals with complex tax structures. Complex tax structures. This is where the Revenue Authority would also want to understand the operations of the business in order to determine if the taxpayer is complying with tax laws or regulations or not, or where KRA suspects significant tax non-compliance. where KRA suspects significant non-compliance, then KRA will have to conduct field audits, on-site audit, comprehensive audits, right? And the authority may employ specialized auditors. The authority may also take advantage of the work of forensic accountants. KRA may employ forensic accountants to investigate potential irregularities, because you say that this kind of audit is conducted where a company or an organization has complex tax structures requiring specialized knowledge of auditors and forensic accountants. Complex tax structures. Do you understand? What then is the significance of this type of audit? Obviously, candidates, field audits provide the most in-depth scrutiny, provide the most in-depth scrutiny of the taxpayers' affairs. Taxpayers' tax affairs. A field audit will provide the most in-depth scrutiny of the taxpayers' tax affairs. These audits allow KRA to gather comprehensive evidence identifying potential fraud or evasion schemes, and also it helps assess the overall tax compliance of the taxpayer. That is the significance of field audits. Significance of field audits. Then lastly, we have the fourth type of audit, tax audit in Kenya, which is known as risk assessment audits. Risk assessment audits. Risk assessment audits. Risk assessment audits. Candidates are conducted based on taxpayers' risk profile. Conducted based on taxpayers' risk profile. Taxpayers' risk profile. These audits are conducted based on the taxpayer's risk profile, considering factors such as industry, financial performance, previous tax compliance history, and so on. So here KRA utilizes risk assessment models to identify taxpayers with higher likelihood of non-compliance, which then it uses to prioritize companies for audits. Risk assessment audits. So what's the significance of risk assessment audits? Now, risk assessment audits enable KRA to focus its audit resources on taxpayers with a higher risk of non-compliance. We all know that resources are always limited, and institutions like KRA may not have all the resources at its disposal to audit all institutions in Kenya. So the significance of risk assessment audits is that it helps KRA to focus its audit resources on taxpayers with higher risk of non-compliance, so that the authority does not waste resources on institutions that do not have a probability. There is no probability of non-compliance. They also help improve the efficiency and effectiveness of audit efforts. In other words, the significance is about target. Here KRA uses what we call a targeted approach. It's just a targeted approach which helps deter tax evasion and ensures that compliance efforts are focused on those with higher potential for non-compliance. Do you understand? Compliance efforts are focused on those with higher potential for non-compliance. That's the significance of risk assessment audits. I've said these are audits that are conducted based on taxpayers' risk profile. Considering factors such as financial performance, previous tax compliance history, and so on. And it's important to note that the KRA under risk assessment audits utilizes risk assessment models to identify taxpayers with a higher likelihood of non-compliance. So it have a list of companies with a higher likelihood of compliance. So there will be a priority list. All right? And the significance is that this kind of audits enable KRA to focus its resources on taxpayers with the higher risk of non-compliance. That's the significance of risk assessment audit. And that will mark the end of our today's lesson, where we sought to discuss the types of tax audits and their significance. We've identified 4 major types of tax audits in Kenya. The first one being desktop audit. Number 2, office audit. Number 3, field audit. Number 4, risk assessment audit. We saw that a desktop audit is conducted, audits are conducted remotely. Office audits are conducted in KRA offices. Field audits are conducted at the taxpayer's premises, and we've seen that is the most comprehensive type of tax audit. So in closing the lesson, I'm going to give you revision questions. Number 1 is a question related to desktop audits. What is the primary advantage of conducting a desktop audit, and how does it differ from other types of tax audits in terms of resource allocation? Question 2. In desktop audits, what types of information are typically reviewed, and how does the tax authority communicate with taxpayers during this process? Question 3. How does an office audit differ from desktop audit, and what are the key benefits for both the taxpayer and the tax authority in choosing this approach? Question 4. What steps can a taxpayer take to prepare for an office audit, and what documentation is commonly requested by tax authorities during this type of examination? Number 5. What are the main reasons tax authorities may choose to conduct a field audit instead of an office or desktop audit, and what challenges might taxpayers face during a field audit? Next question, number 6. How does the intensity of a field audit compare to other types of audits? I repeat, how does the intensity of a field audit compare to other types of tax audits, and what specific aspects of a taxpayer's operations are typically examined in a field audit? Question 7. What criteria do tax authorities use to assess the risk level of a taxpayer, and how does this influence the decision to conduct a risk assessment audit? Lastly, in a risk assessment audit, what measures can a taxpayer implement to demonstrate compliance and mitigate potential risks identified by tax authorities? These are 8 questions. 2 questions for each type of audit. In total, 8 revision questions. Please try and attempt the questions before coming to the next lesson. Bye-bye.